the most active global pre-seed investors. She's invested in 300 plus companies as first money in. She's the co-founder and managing partner at Everywhere Ventures, where she has a thriving community of founders and operators that help source, diligence, and invest in the next generation of startups across three verticals: money, health, and work. I believe that it's all over the world, if I'm not mistaken, hence the name Everywhere. Prior to launching the fund, Jenny spent time as the managing director of Techstars, where she invested in a portfolio of companies currently worth over $10 billion. She's a two-time founder, lawyer, adjunct professor at Columbia and Cornell, and most recently a published author, which we will talk about. I want to know where my signed copy of your book is. I imagine it is in the mail, clearly.
In the mail.
No, I should buy it, right? Like I should buy it so you can get on this. Welcome, Jenny. Thank you for being here today.
Thanks so much for having me. This is definitely the highlight of my day, and you've made me
Yeah.
blush so much that now I don't look as pale. So well done.
This is good, I think, we work so hard on the damn bios, like all of us. Like, and I don't like reading out loud when I'm in front of people, but also like you work really hard for that bio. So like, let's take a minute and read the damn bio.
Thank you.
Okay.
It's super.
Before I get started and embarrass you further by like asking you to share your story, I'm going to ask two things of the audience. Also in the chat room. The first is we were having a very fun conversation before we opened up the room on what is everybody's favorite show that you are streaming right now. And so tell us what you're streaming, because we need book and streaming recommendations. And the second thing is that I'm trying really, really, really hard to get to 200 responses on our female founder survey, and we need around 70 more. And so if you have not, please, 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 please fill out the survey. Divya will add a link to the chat room. And if everybody here just asks one other female founder to fill it out, I just want to have enough voices that I can truly anonymize everybody's experiences. So thank you so much.
I see some great shows coming
I
in.
know, I'm like,
Very
amazing.
excited. Can someone write a list? Because I need to be focused on this, but I want the
Oh,
list.
dude, White Lotus. Okay, no, I should have asked this at the end.
I know. Well, hopefully someone can write a list because these are great. And
Yes,
I'm very
somebody's
excited.
gonna write a list and we'll put it out on social so we can all like watch together. Okay, Jenny, let's start with just your background. Kind of, I read your bio, but give us the insider version of what that journey was that brought you to Everywhere Ventures.
Yeah, so I like to say I'm both an accidental entrepreneur and an accidental venture capitalist. And that's been, I think, the through line of my career is that things have kind of unfolded unexpectedly. So born and raised in New York City, actually on the same block that I grew up on. So kind of small town girl in a big city, which is funny. My parents lived down the street. And started off like very traditional in some ways, or traditional for my upbringing, which was I went to law school, I worked in finance, so I had like a very kind of set path. And one day I had an idea, and I didn't come from like an entrepreneurial community. Like most of my friends were lawyers and bankers and the like. And I didn't really even know the term venture capital or any of those things. But what I did know is that like I had a personal problem that I was trying to solve. So kind of that typical empath founder where it's like you're not really thinking about labels and all these other things, like you just want to solve something. And so kind of a nights and weekends project turned into a company, which turned into me having a very different path and leaving my job at JP Morgan, where I bootstrapped my company, and launching this crazy software company, which I grew to a few hundred people and ended up exiting a few years later. So it was a wild ride. I made probably every mistake you could possibly make, but hopefully those mistakes have translated to where I sit on the other side of the table as a venture capitalist. And then just quickly on that, again, I was working on my next company when I ran into the folks who ran a fund, and they said, have you ever thought about investing? And I said, well, I've done a little angel investing, but my passion was really around solving problems. And at that point, I really fancied myself a product person. But they kind of convinced me to spend a year with them, and that year turned into 8. And I kind of realized maybe my true calling, or my true north, what I was good at, and that was taking a lot of the learnings, synthesizing my experiences and others, and translating that into supporting founders at the earliest stage. So that's my journey, a little bit non-traditional, but I think most of us got into this somewhat circuitous path.
How has your investing philosophy changed? So it's been like 8 years at Techstars and like how long have you since you so it's been like 15 years of investing. So are you a
Been
different
10
investor
because
today?
like my through line is that I bootstrap things while doing other things. So my startup, I was working at JP Morgan when I started that. My new startup, which is my fund, I started while I was at Techstars. So we've been running our fund for 7 years, but for at least half of those, I had a full-time job. So Everywhere Ventures is 7 years old, but or almost 7, 6.5, I guess. But I was working full time during a number of those years.
So it's a decade.
Yeah.
Um, do you think that you're a different investor now than you were 10 years ago? Like, how has your philosophy changed over time?
I think that's one thing that has stayed somewhat constant, is that when I was a founder, um, it wasn't easy raising money, but I felt like the cash was the commodity, and what I actually needed was support. I think now there's like a lot more support for founders. Like in 2007, like we didn't even really use that term mentors. There were like these kind of awful advisor people that wanted to take like 20% of your business to like help you. And there just like wasn't much. This is like pre YC and Techstars. There just like wasn't much in New York. So I think like we've come a long way as an ecosystem, and we've seen like a lot more resources, but I fundamentally enjoy and like kind of flip to the other side, because I just felt like, yes, like people need help raising cash, and that's one thing, but like what they really need is like help getting customers, is help, making good decisions, is like help having a good perspective and strategy. And it's very lonely being a founder. And so if I could provide that, kind of that foundational support. And it started, as you mentioned, as an accelerator. So that was like the way that I did it, like cohort based. People would come to New York, they'd sit in my office, and that was the support. And now I've kind of put my own flavor on it, which is Everywhere Ventures, which is a bit of a hybrid. I mean, we're not an accelerator, but we raise all of our capital from other founders and operators. And that community is really what supports such a large portfolio. I mean, most people say, how can you have 300 companies? And it's like, well, I've got 500 LPs, and those people are very active in our community supporting this large portfolio. So I like to think that every iteration I've kind of learned, taken some of the good and then carried it over into what I'm doing currently. And, I hope to always be evolving the model.
So, tell us a little bit. So you have Everywhere Ventures, and now you have a book appropriately called Venture Everywhere. But it's not just about venture capital, right? It's kind of like I read it described as a love letter for anyone who's ever attempted to do something hard, and I love that. Can you tell us a little bit about it? What inspired you to write it? Like, and
Yeah.
what it's about?
Well, it's funny. I mean, I'll say it to this community, but so when I announced the pre-sales a few months ago, like a lot of people in our community bought the book, which I'm so grateful for. And so like on Amazon, it kind of like rose through the ranks, and you get this, designation. So my publisher called and was like, I'm, thrilled, you're #1 in venture capital this month. And you think like I'd be like super excited, but like all of a sudden my heart kind of sunk, because although the book has a lot of principles that I've learned along the way about running a fund and entrepreneurship, like the book actually isn't about venture capital at all. The book is about like living the life that you want to live, creating the career that you want to live, creating the world that you want to, live in, and you want your family to live in. And it's, woven into my own personal journey, meeting incredible founders who've gone through very challenging times, who've grown up around the world, and who've persevered. And so again, the book is really, it's a lot of things, but it's a little bit more of like a travel journal, experience with some entrepreneurial principles than venture capital. So I thought that was like really funny. And like the reason like my heart sunk when I thought about it, like, you know, being in the venture capital section is like I had this image of like all these tech bros who'd bought the book and they thought that the book was like, you know, 10 principles for like, you know, like all like these kind of frameworks that you see in all these VC books. And I was just like, they're going to get this book and they're going to be like, who is this crazy woman traveling around the world, meeting these entrepreneurs and sharing these like wild stories, because the stories actually are pretty out there. So
I kind of want you to share, like, pick one wild story, like one short wild story, and give us a taste of it.
yeah, so it's 12 chapters, 12 countries, 12 stories in those countries, and 12 entrepreneurs that I interview. And so I have a whole chapter on the first time I went to China. And you know, it was like very hard to get my visa. And I show up in China, and the guy who, you know, picks me up at the airport, he works for a big media company. And he says, well, you know, the only way to get over, there's only one way to get over jet lag here. And I was like, really? I mean, I'm like exhausted. I've been on a flight for like, you know, a few days. And he takes me to this store that only has like sequin costumes. And he tells me I need to get a costume. And then he takes me to like the biggest, most outrageous, crazy gay club that like you could ever imagine. And like, I didn't honestly even know that those existed. I mean, we're in Beijing and I was like, really? I didn't even know that these could be here. And so we spend the night like dancing in this like amazing club, have this like great time. And then he like plops me back at the Hyatt Hotel and I sleep for like a whole day. And like, he was totally right. And like, I had no jet lag. So they're just all these like really funny, like anecdotal stories, which just like talk
Like, I
about,
was really thinking that was going to be like herbal supplement story. Like, did not see a sequined outfit
yeah,
a club party as the answer to jet lag, but
yeah.
maybe I will try it one day.
Yeah. But I mean, honestly, it's like what it is about is like pushing your boundaries and just like I mean, my natural inclination would be like go to the hotel, take a
Sleep.
hot bath, don't talk to anyone. And
Yeah.
like you get into these places and modes and you have to kind of lose some of those inhibitions or, you know, some of those you know, those constraints that we have on ourselves, and when you have to kind of go with the flow. And so the book is really about really how entrepreneurs do that all the time, right? Is that they're responsive to data, they have this kind of kinetic energy, and they pivot when they need to, and they're kind of constantly figuring out like what's the direction to go. So the stories, you know, some of them are sad, some of them are hilarious, but you know, there's kind of like a through line of what it takes to be an entrepreneur.
I I feel like I could talk like the entire hour just about that. I really do, about like just building the life you want, building the career you want, building the world you want. Um, I love that. And I have like a whole section of questions that are all kind of trend and landscape questions. But as a segue, I think let's actually just focus on entrepreneurs first, because that I think it's, you know, we both, you know, dedicate our lives to helping entrepreneurs. And so let's hear from you. The first is just, you know, we are in a moment of tremendous uncertainty, and I am going to come back to this kind of towards the end of our time together about like what is going on in the market, et cetera. But we are in this moment of like incredible uncertainty. And, you know, starting a company is basically like walking into like a, you know, a field of uncertainty. So talk to us about one or two investments, or even like a time on your own when like you have seen entrepreneurs be like most effective in moments when like there's no answers, there's no, you know, very little data, very little kind of certainty.
Yeah. So I talk about actually in the book, I just mentioned it, this idea of like being kinetic and like kind of always being the person that's, out there asking questions, listening, trying to absorb as much as possible. And I think that's one of the characteristics that we look for in our fund and in founders as we get to know them. It's like, do you have that like voracious kind of appetite for learning and for growth? I guess sometimes people call it like the learning mindset or the like. I just call it that kinetic energy because like you just feel it like when you're on a call. And so I think that really serves entrepreneurs in those dark times because you can get so in your head. And I know in my company, my second company, my first company was actually successful. My second was a shit show and I had to shut it down. And in those moments of just feeling so kind of, it's like such a failure. I didn't project that, right? I was like constantly out there, like trying to get information of like how we could turn this around, projecting like a very positive attitude so that like, people would want to engage with me and all these things. And I sometimes think like when we get kind of so in our own heads, it's just, we put up these walls. And I find founders that can be really open and transparent to these challenges can sometimes get through them because other people can help them. So I've had a lot of cases in my portfolio and my own personal experiences where I've realized like my inclination, I mean, I'm like a huge introvert. So my inclination is not to talk to anyone, go home for like, 5 days and just like figure stuff out myself. But the truth is, if you can get out of that mindset and, put yourself out there and like really be open to possibilities, like you might hear something that you couldn't come up with yourself.
So I'm hearing a trend because this is basically another version of like put on a sequined outfit and go, do something. No, like that is like uncomfortable and unnatural following someone's advice. Um, how do you think you, or like for entrepreneurs specifically, like what advice do you have for folks to stay confident in periods where you feel like you don't know what you're doing? Or maybe you don't need to, maybe it's all about projecting confidence.
Yeah, I mean, I think like there's the self-care thing. And then I think there's kind of some other practical things. So, making sure that you are taking care of yourself in some way, I do think helps with that. And as an entrepreneur, like you're not going to get 10 hours of sleep. You're not going to like have all this time and all these things, but you can do kind of small things, I think, for yourself that bring you joy. And I always talk just about those small things that you can like look forward to in your business, whether it's someone that you work with or some little, nugget that gets you excited. So, I think there's that. And then again, there's the practical stuff, which is like in your dark days, making sure that you don't isolate yourself like so many times. And I'm sure you see this all the time when like we know that our companies aren't doing well because like we don't hear
They
from them.
stop emailing.
Right. And it's
Yeah.
like, and we all know, and they know too, that like, that's actually the opposite of what you need to do. Right. So like, I mean, we're there to support you. And like, we've all, everyone on our team has been entrepreneurs. And so we know those hard journeys. And so if you can, go outside of your comfort zone and put yourself out there, that can be really beneficial. So, again, I guess going back to that theme, but I do think that's a way where when you're in a dark time, you can lean on other people, right?
What are some of the other qualities that you look for um in founders that you get excited to invest in?
Yeah, so I talked about the kind of kinetic energy founder. We call it the fast founder at our fund. I'd say, people often talk about vision and it's very abstract. I'd say for me, it's a vision of the future that maybe doesn't exist now and like a real articulation of it. So it's not just like, I have a big idea to change the world, but it's like, here's what I think the world is going to look like in 5 to 10 years. Here's why I feel that way. And like, this is why I've built a product, for that market. So again, I'm less looking at, and this is kind of, funny for entrepreneurs to hear, but like, I'm less looking for pain points like today, because I think you kind of get into a trap of like, oh, well, I need revenue on day one. And I need to, it's great to find people that want your product now, but like the biggest opportunities, like the reason that, some of my Techstars companies have, incredibly high valuations and like, just great entrepreneurs is like 10 years ago when I invested in them, they were telling me like the craziest stuff, like worlds that just did not exist. Like, can you imagine if our whole financial system is, working on cryptocurrency? And 10 years ago, people were like, that's nuts. And like, I also thought it was nuts, but I felt like these founders had the experience and the vision of like where the world was going. And then like, lo and behold, it took like, 8 to 10 years, but like it actually did play out that way. And so I think that's the thing that I'm looking for. So that's like number two. And then the last one is, I guess, just like the resilient gene. And I have seen this in my portfolio, and like, I do kind of get it. I think there's a lot of founders that give up too early. And, there's an opportunity cost, right? If you're doing something and it's not working out, like I get why you as a founder want to move on. Like, I've been there as well. But I think some of the best companies out there in the world have been pivots. I mean, all the products that we use, like YouTube, Slack, like these were all different companies. Shopify was a marketplace for ski equipment, right? And now it's like one of the biggest, success stories in the world. And those founders just didn't say like, oh, actually, this marketplace is just probably not too big. Like, I'm going to start something else. Like, they sweat through it and they went through hard times and they bootstrapped their business. And so if you look at some of these massive success stories, YouTube, Slack, I mean, there's so many, Instagram. I mean, there's just like so many examples of things that started wildly different. And the founders were able to navigate through. So I think having that resilient bone is kind of what we look for, especially because we invest so early that, ideas will change, but the founding team, probably won't.
That's so interesting. I almost want to say like, do you think that the opposite is also true? Or maybe not to ask a leading question, like I think that the opposite is also true, right? Like I think that at some point you have to move on. So how can founders know like whether it's time to pivot or and how big to pivot, like how do you know?
Yeah. I mean, where I see it is like founders that are kind of stuck in a rut because they're kind of, doing the same thing and expecting a different outcome, and that's not happening. And so
Yeah.
those aren't the wildly successful pivots. Like if you think about Slack, Slack was a game company, games, like they were doing games. And the way that Slack came about was they developed their own internal like instant message system that they were using, and then like they told their friends about it, and then their friends started using it, and then they like realized like, oh my god, well sure, I could build a game, but like this thing seems to be taking off. So I find that when founders aren't giving up, it's because they're just doing the same thing and just wondering why the results are different. And it's like, that's really tough. So I think sometimes you need to extract yourself and say like, okay, what's my mission? And is there still a company here if our strategy changes, but our mission stays the same? And so that can be a really effective pivot.
Mhm. So, and it's funny because we had a question here that we prepped for you around, a lot of investors want to see traction quickly, but you seem to prioritize the long-term potential. So how do you balance those two? And particularly in the context of like, almost like an expectation or an openness for that like short-term vision to not, to like not play out and like go do something totally different.
I know this is so, so hard.
Yeah.
The first thing I'll say is if you're at the earliest stages of your journey, just you can't pitch seed funds if you're a pre-seed. Like, and everyone will tell you that they are open to idea stage, but you kind of have to go with the data, right? So I'd spend a lot of time on Crunchbase just looking at the round sizes they're doing, getting to know those companies. And most of the seed funds are coming in when there's like a significant amount of revenue. It seems like now to get like a $3 to $5 million seed done, unless you're kind of the who's who, seems like you need to have close to $1 million ARR, which is crazy, right?
Yeah.
Or
Seed is
500K
truly the
ARR.
new way.
Yeah,
Like you're all the way back around to like 2018 and like seed is
yeah.
an
Yeah, so seed is a nice. So I think you have to go to people like yourself or me, or there's lots of us that
yeah.
really are preceding companies. And then, again, we're looking for momentum in the business. We're not looking for traction. So momentum for me means something different. It means every time I talk to you and interact with you, is something moving forward, right? Have you advanced the product? Have you closed Another customer? Have you brought in an amazing co-founder? Like all these things. So we're looking for like the business to move forward, not like for everywhere. We're not looking for revenue. We're just looking that you're going full steam ahead, whether this round happens or not. So I think there's some good nuance there, but honestly, like it's just hard as a founder. You're told so many different things, like focus on the vision, and then so many funds want your traction, and I'm very sympathetic to that.
Like this is the piece of this conversation that I'm gonna like snip it and put online. Because that idea of like forward momentum is so lost in the sort of traction requirement and advice. Like, I feel like, especially in this market, I don't know if you agree with me or not, but like, I feel like momentum has always mattered, particularly just like the speed of execution. Like things are happening, we are shipping, we are moving. But it feels like today, velocity is like more important than it ever has been before. I don't know if
Um,
you're also seeing that, just like some of the kind of speed at which AI companies are getting to substantive amounts of revenues is like cascading all the way down. To like now the expectation is that you're gonna like move that traction really, really fast.
yeah, I mean, I think that that's true. I think there's an expectation that you're going to be utilizing the best AI tools for your business, and that you're going to be building at the speed of many AI companies, and that may or may not be realistic for you. But to give you like an example on fundraising, like oftentimes founders are like, I'll have a call with them and they're like, we're looking for a lead. And I'm like, great, how are you doing otherwise, getting other folks? And they're like, well, we're really like focused on the lead because we're raising 2 million and we need, that kind of 750 to million. And I'm like, okay, that's great. Fine. And when I talked to them 2 weeks later, they're like, yeah, we're still working for the lead. Now, if they came back to that call and they were like, oh, I just closed another 250K, like, that to me is like momentum in the round. So I think you can build momentum in whatever, in all these different verticals, different areas of your business, right? If you come back to me and you say, like, actually, we thought we were going to need to hire 5 engineers, but we have, spent the last week like learning Cursor, and like the founding team is actually working on all these things. To me, that's like pretty impressive, and that's momentum in the business. And that actually happened to me recently. I've been kind of tracking this company, meeting with them, thought it was pretty interesting. And they totally like revised their whole hiring plan because the founding team started digging into AI tools and like learning how to use them. And they were like, oh my gosh, actually, we can do so much with a lot less. And that was just like a really interesting inflection point in the business that I was, very excited to be involved with a company that's just thinking that way.
I wanna meet that company. I'm actually really excited about that trend. Because I feel like that is the true moment of democratization of venture capital, when you no longer need money, right? Like you don't actually have to like raise huge amounts of money to hire. And so I'm
And
really excited to see that.
it seems crazy to us, but like I started my company in 2007. We had to purchase server racks.
Yeah,
Like, and the thing that held us back as a company was literally compute costs.
yeah.
Like you don't have, and so it was like while we were running the company, it's like AWS launched and like our lives changed, and it just like didn't seem possible. And so I think there's been a few of these inflection points, and I think we're going through another one of what's possible. And I think it's really exciting, but you just can't be left behind. And so I have a story that's like a little bit the opposite, which is I have a company I really love. They're going through a recap, which we can talk about. Those are happening a lot. Where basically they didn't hit the milestones that they needed to hit. But people kind of still believe in this business. The founders are really excited about it, but like the cap table just won't work because they've raised, several $1 million, over 5 million. So an investor kind of comes in and wants to reprice it, and that's what a recap is. And I was talking
And
to
to
the
be clear, like they
founder.
want to reprice it lower.
Yeah, I mean, basically what happens is previous investors potentially get wiped off the cap table, or they have an option, what's called a pay to play, where they can put in more money and maintain their ownership. but it's essentially an ability to some extent wipe the old cap table so that founders still have good amount of equity and that there's, as if the company was starting again, essentially. So you have two ways to do this. You can shut down the business and start something else, or you can like recap it and kind of start fresh that way. I'd say those are the two ways. So I'm speaking to the founder and they are telling me about their hiring plan. And I was like, even with this like recap and whatnot, like I think your burn should be lower. And they started telling me about, why they needed all these engineers. And I literally said to them, like, this is the old way, guys. Like
Yeah.
you are not, and they're actually in the AI space. So it's like they get it. So this wasn't a surprise. I mean, they kind of just said like, yeah, I know. But you just need to change really fast now. And so, you have to think about economies of scale and you just have to think about how you can do things with a totally new mindset. And we all are just have to like learn so quickly. But I don't know. I mean, we've done it before. I do think, the AWS example is kind of what it was. And, it wasn't people, but it was, it was hardware that was serving us. And all of a sudden that went away in a click. So I think that's a lot of what's going to happen on the engineering side is that we're going to kind of figure out other solutions.
There's actually a bunch of questions in the chat. And I do think that a lot of people, like myself, have interest in this particular topic. So let's stay here for a minute. So first is like so much of fundraising is the investors' expectation that the founders will be able to raise more, right? Like which sometimes just turns into a self-fulfilling prophecy, right? Like nobody believes and nobody invests in you, and then you can't raise, and and therefore they were right in their belief that you should not be raised. So like it's this self-fulfilling thing. So do you think that this moment breaks that? Like, is that
I mean,
expectation or is that sort of like extra burden going to go away?
I mean, I have a lot of founders that are pitching me and they're basically saying like, this will get us to break even
Ability, yeah.
and then we will have options. So not that we want to run a small business, not that that's where we end up, but let's see if things are working there. Let's control our own destiny. Let's not pencil in that we're going to raise round after round. Let's, figure this out. And actually, it's funny. I had one company that did that, realized that they just couldn't see a huge opportunity, but instead of shutting down the business, they actually spun it out. And they have someone running it. It's doing a few million in revenue, and the founders have started something else. So I think we're just going to see all kinds of models we can't even conceive right now. But I think your general kind of sentiment is true that things are just going to, potentially look really different. We have to be ready for that.
You've mentioned in the past, and also talked a little bit about this in the beginning of our conversation around like mentorship and sort of being really active with the founder plays a role in your investment strategy. And now it's not just you, but also like scaling this community, or maybe not scale, but like activating your LP community to support the founders. So what is your approach to working with founders? How, and also like, and this can be a tricky one, but like, how do you approach working with founders when they're facing like the toughest challenges, but also you're their investor? And so like, how do you approach that?
Yeah. So you might say to yourself, well, how can you be so active with your founders when you have so many? I view
I
my
get that all the time as well. And
yeah. I view my job as helping to get my founders to a priced round where there's a board and there's an investor that probably only makes, 2 investments a year or whatever that is, who's going to be a great kind of steward of this company. I feel like that is my role. And so I spend a lot of time at the beginning helping them, get to that point, whether it's the fundraising or, getting their financials like in place, which is a big one for me, always helping with that, making sure that their strategy seems scalable, all those kinds of things. And I view my role. And again, this is not like playbook for venture capital. There are many people that think that's insane and you need to support the company. It's not that we don't support the company, but I feel like my role personally is to do that. And then we've built out a suite of collaborative tools that allow our founders to interact with each other, to help and support each other. And, community is hard. As you know, you've built like such an amazing community. It doesn't happen overnight. You spend years and years building it, building trust, building tools, testing things don't work. And so that's like what we've done. And so what we have done at Everywhere is, instead of one to many, which is how venture capital traditionally is, there's an investor, that investor has a portfolio and they're supporting that portfolio. We've built something we call many to many, which is, it's not Jenny supporting a portfolio of 300 investors, 300 portfolio companies. It's literally 500 LPs plus our portfolio companies supporting each other. So if you can kind of create this like rich topsoil of an ecosystem, founders feel really supported, and they don't need to talk to me to feel supported because someone in the community is helping them with something that they need. So the way that we do that is through events, through our Slack channel, which I think exchanged more than 1 million messages. I think we like hit that threshold, and like no cat memes. It's all like founder resources. And through some of the software tools and collaborative tools around our Airtables and our CRMs that we build with our founders. So work in progress, but I think that's that's the way that we try to support our founders. And I think maybe that answers the second part of your question, which is when we're in that early stage and I'm like really actively like helping them get funded or helping them hire or something like that, I'd say I'm pretty tough love Jenny. Like, I'm just gonna tell it like it is. Um, you can come to me with anything, but I'm definitely gonna give you the feedback that I want to give you. And I think that something shifts at some point, right? Where it's like, again, these companies kind of graduate. And then I feel like I become really like friend of the founder. So, I mean, I have companies that are unicorns, right? And they have messy times and they always come to me, which I, kind of like makes me super happy when things are messy. And it's like, I mean, I'm so far removed, even though I'm like an investor in the cap table, but like I'm so far removed from the day-to-day of this company, of the board, of all of that, that I can be, a super cheerleader or a sounding board or, just another data point for them. And, that's a real joyous moment. And there's kind of a continuum of how I get there, over the years.
Yeah, you there's a traditional power that comes with sitting on a startup's board, but there's actually also a lot of power in being the person that gets the call before the board. And like having that kind of ability to have a real conversation, and the founder is like not scared to call you when things are ugly, messy, ugly, messy early.
Yeah,
Um,
I'm on no boards, so everyone calls me.
yeah, exactly. Me too.
How do
Yeah.
I manage my board? Yeah, so I love that because I can really, just use I mean, what's interesting about having invested for 10 years and just having such a big portfolio is I've kind of seen it all. And as I'm seeing it in real time, there's just so many data points, right? So founders will call me and they'll be like, how is everyone handling this? And I'm not just giving them a data point from 2, 3, 10, 20 companies. I'm basically saying like, I can look across what is happening over so many companies and kind of give you some directional guidance based on some of these trends or some of the things that I'm hearing and seeing. And I think that that can be really useful.
Let's talk a little bit about your process, your investing process. So what does that look like when you're evaluating a company for investment, and like who is involved? What are the kind of the motions that you go through?
Um, well, I think when you're so early and you're investing in people, it's very hard to have junior people doing that. And we've tried all different iterations of this because for me, like a junior person can, and I love the junior folks at other VCs and just the ones, I mean, they're so passionate and bright. Like I just am like shocked. So it's nothing personal, but it's when I'm investing in human qualities, it's very hard to have someone else without that lens. My, years of building companies, 10 years of investing in companies, plus my, all my years on this planet. Um, like give much more than like a summary of the product. So like, I think they can do that. But it's very hard to kind of have that. So my co-founder and I, like, we just talk to all our companies. And we do have amazing junior people on our team that help us with a lot of things like data and they, you know, the fundraising, and they spend a lot of time with our portfolio companies. And they do join calls, but the truth is, like, at the pre-seed, like, you really need to be talking to the decision makers because, again, you're conveying human characteristics. So I'm not saying that's how it is at all funds. I'm saying for us and for me personally, like, this is what works for us. So the challenge with that, as you might know, is like just the hours in the day, right? So there's thousands of founders that want to get on our calendar, and there's only so many calls that we can take. Whereas if you work at a big firm and there's kind of a process, and there's like a lot of other folks that you can talk to along the way before you get to the general partner, like, you can just do that more, you know, more efficiently. And actually, it was so funny. I just had this discussion with someone on Twitter, and they were just like their premise was that people at big, you know, well-capitalized funds are just way more responsive. And I said, yeah, there's some nuance there. I can respond. Like, I'm actually very good with email. I'm very responsive. The thing that I can't do is get you a slot on my calendar so easily. Whereas, you know, if you're at a bigger fund, you might not be doing all the things that I do. You might not be fundraising because you have a full fundraising team. You might not be doing marketing because you have a whole marketing team. So it's different. Like, at those larger funds, you're oftentimes just an investor. Like, that's what you're doing. Whereas for me, people have to understand, and for you as well, I mean, you're running a podcast. Like, you've got so many things going on that are all kind of funneling into, you know, your investing, but you're doing a lot of it yourself. And so I think that's, we have to kind of, you have to understand the process. Unfortunately, uh, there's just not enough hours in the day to talk to all the founders that we want to talk to.
So a couple of like follow-up thoughts on that. I could not agree more. The first is, I think, like, a really important takeaway from that point that you just made is the importance of a founder's written communications, right? Because, like, how you're going to get a spot on anybody's calendar is the quality of how you explain who you are and what you do and why you should have that in words and potentially in slides. And I think, like, you know, we talk a lot about like the pitch deck and the, you know, the blurb, but like, that's why it's important, right? Because, like, it earns you the right to be on the calendar, particularly if you're not someone who's already well connected, right? Like, and sort of, you know, that's going to get like a favor. So I want to kind of highlight that as like, hey, you know, that's why it's important to be able to communicate so effectively. The second thing that I thought was interesting, and I want to kind of get your take on, is I do think that there's like a chasm between big funds and small funds. And maybe a more important for me is not just like how many hats does the investor wear, but also how many investors are like, who does that investor report to? And I do think that, like, when funds are like multi-GP, right? Like when they have a lot of investors and a lot of partners, and like a lot of those people are evaluated like normal employees. Like, they're evaluated once a year, like they do a performance review, and that's kind of what their jobs are like, right? Like, versus like when you're pitching the owner of the fund, you know, nobody is doing a performance review on how you did this year, right? Like, they're doing a performance review on how your fund is doing in the long term, you know, in good theory. And so I find that, like, there are, and this is not even an original idea, this was another VC that is also like a fund owner for longer than I have, Rob Go at NextView. And he said that there's two types of companies. There's like owner companies and there's like investor companies, or owner investments and investor investments, where, like, if you get to form your entire portfolio on your own, you know, you're going to have way more opportunity to make up your own mind, versus like if you're competing with every other partner in the firm for like the 10 investments that get to be made, you're going to be a lot more cautious. So talk to me a little bit about that kind of like appetite for risk taking between you and your partner?
Yeah, so our firm, I mean, it's a really interesting point. I think the challenge is like there's really no way for a founder to know the inner workings of a firm because I don't think it's really just divided big and small. I think it's just like firm to firm in many cases. And so our firm, we are what's called conviction led versus consensus. And I know many small funds that are consensus, not conviction. So, but what that means is that Scott and I make independent decisions. We are very excited to be collaborative. Like, you know, he's my closest person. We talk 100 times a day and we are very excited about working. We don't give attribute in our fund for whose deal it is, like externally, but we run our processes pretty much separately until the end when we kind of bring each other in or along the way when we want feedback. But we're conviction based. Any company that he pounds his table, pounds his fist on the table, he wants to do this deal. He loves this deal. This is why he loves it. This is why it fits our thesis, and like, I am so happy to support him and the same for me. Consensus driven is like when there's a voting and there's a lot of the stuff that you talked about, which sometimes at bigger firms can be a lot of politics. Did you vote with someone else? How does this fit in with the larger strategy and what's my carry going to look like? And sometimes it's not as kind of annoying as that. It's just that, the founders of the firm are just so aligned and they just want to make sure that everyone just feels amazing about every deal. And that can be great too. So I don't think there's one way to run a firm, but if you do have that insight, obviously it could make your fundraise easier, but I just like, there's really no way to know.
That is a great point, but maybe you could just ask.
Yeah.
Can you ask? Like, I think
I
it's
don't know. I don't know if they would tell you.
no.
No, because there's something about the word consensus that feels derogatory, which I actually don't think it is at all. It's just like another way to run your business. But I think if you said, are you conviction or consensus? Most of them would say consensus, even if they are, sorry, would say conviction, even if they are consensus. Because, conviction sounds like you have agency. Consensus sounds like you have to ask your friends. And again, it's really not that. So I think a lot wouldn't tell you, but maybe some would say like, yeah, we have a voting system. And, some of the big firms are kind of notorious for being very transparent about it. I know like Bessemer has you get a voting card and they're like certain people are invited to the meeting. Like they have a whole thing. And I think they write about it and it sounds like pretty impressive. Like everyone has a number of votes they can cast and points and it's like a whole thing. But
Well, a whole new thing that you guys didn't know you needed to do research on came up today. Okay, we're kind of towards the end of our time together. And so if there's burning questions, please put them in the chat and I will take a look and pick some from there. The trends questions. So, we talked a little bit about the sort of using AI tools early on to lower your burn. But what are some other things that you're excited out in the world? Like, what are we're in a moment of like deep change on so many levels. So what are you focusing on? What are you excited about? What are you like, concerned about?
Yeah, so we in the new fund that we'll be launching, we've kind of reformulated the areas that we look at, and we kind of took a step back and we're like, oh, yes, we invest in healthcare, we invest in fintech, and we invest in some of these areas, but like we actually invest in is the underlying software that makes those businesses more resilient. And so, because this truth is like, we never invested in like healthcare delivery. We always invested in the software that enables like digital health businesses to thrive. So I think the thing I'm excited about is like, there's just a lot of people building really interesting infrastructure layers to make our institutions, to make our companies, battle tested. And so I'm excited about that. So whether you're, excited about the manufacturing space or the health space or the climate space, all of these things, like what is that technology that fortifies these businesses that make them, that give them longevity. So I think those are the things that I'm excited about, less about, verticals, and more about kind of that layer.
We had a question here around like what are red flags for you when you're evaluating either a founder, a team, or a company or a space? And also, have those red flags changed in with like the wave of AI?
I mean, I think they're similar. We, are looking for those kind of fast founders that can be, very responsive and that can build momentum, whatever that is, like during the fundraise, outside of the fundraise. We're looking for founders that, don't want to give up. So I think we've kind of gone through a lot of them. And so the red flag is just like when we see the opposite, right? When we just see, I mean, there's some founders I keep on talking to and they're still looking for their lead. And it's like, probably not, probably a bit of a flag that it's just like not getting done. So I think those are some of the flags. I'd say the other thing that I'm seeing a lot of is founders maybe have raised a pre-seed. They, maybe have some traction in revenue. They're going out to raise their next round, coming with like pretty big numbers. And I think that can scare a lot of people. We have actually a lot of companies fundraising, and they're kind of like boldly saying in their deck, they're going to raise like $5 or $6 million. And then when we try to help them fundraise by connecting them with other investors, the investors are like, well, I'm really doing like $3 million rounds, so not a fit for me. You're kind of like blocking off an opportunity. So I always suggest not to be, not transparent, but kind of give a range, or actually don't even put the number in your deck. Like you can have a side conversation, because like every firm is a little bit different. So obviously if you're pitching huge firms, then the $6 million numbers for a seed round is not going to scare them. If you're pitching, you, Leslie, that's probably going to scare you. So, but you're kind of blocking yourself off from the conversation. So again, I wouldn't pitch a pre-seed investor if you really want to raise 5, but you don't want the investor who writes $1 million check and the rounds are usually like, 2 to 5 million, just to say no and not even take the meeting. So I'm seeing a lot of that. I'm not sure why it's happening, but I'd say it feels like a trend in my portfolio, and I'm not excited about it.
Interesting.
Yeah.
I don't know. Do you feel like rounds have started to move faster than they were in the kind of 2022, 2023 uh like age
Still
period?
very binary, kind of like the have and the have nots. So, I mean,
Yeah.
we had a healthcare company that had some really nice revenue from the pre-seed. And I mean, they were AI and healthcare and just hit a chord. They had multiple term sheets. Everyone was like fighting over this company. And then I have other companies in sexy spaces like AI infrastructure that like, it was just very, very hard. It took forever to get those. Like people were just really worried about differentiation and all those things. So I'd say it's unclear, but it seems very binary. Some of the rounds are going really fast. A lot of them are just slow, and like the reasons why are a little bit unclear to me, unfortunately. So what you can take from that is like prepare for the worst, which is like if you're, a pre-seed company, you're going to raise your seed, you got to have like 100 good leads on your list. So prepare, like do the work, do the research. Don't just put like, don't just go through some huge list and put it on your spreadsheet. Like actually figure out who's the person at the firm, why would they be interested, and then put it on your spreadsheet and like really kind of qualify. But maybe when you might, a fundraise that goes fast, you maybe only have to talk to like 30 of them. But some of these ones, like we're seeing founders need to talk to 100 investors to get this done. So kind of prepare yourself for that.
Um, I don't want to put you on the spot on this one, but if you do, a question from the and we can also follow up on this and share later, but like a lot of the questions that are in the chat room now, in my DMs, and just in general, like when we have these conversations, like a lot of the questions are quite specific. Like, what do I do? Like people actually really do need advice on like a very specific, like, and
Yeah.
so what are some resources? Like, do you have good kind of go here for this type of advice? Like if they need pitch deck advice, if they need like specific things that are hard to search for, like what are your go-to resources?
Not really. I mean, I think that's why you need that's why I loved running my Techstars program, because I felt like, we just had, a great community, and I believe a lot in peer learning, as I imagine you do as well, running the cohorts that you ran. And so I think just like delve into those communities, like your founders, like people on this call are probably your best source of connectivity to all these things. Like it's always fascinating when founders come to me and they're like, hey, I need a connection to or I don't have connections to all these investors. I'm like, go through your founder friends and see who they all know, because that's going to be like a way better introduction than coming from me, actually. And they kind of scratch their head. They don't realize that. So I think there's just so much you can get from peer learning. And there's so many great kind of programs out there, communities, like even ones where you don't, pay anything or give up any equity. But I just say, like, get into those communities, start your own. Go to a lot of events, in your community, where they're relevant, and just like meet people if you feel like, you don't have that. Those to me are the best resources.
That is a great answer for that. Yeah, absolutely. That is a great answer. Like the best resource are the people around you. For sure. And I think that like I am here because of that, right? Because like a decade ago, I
Yeah.
started a like a meetup for female founders, and here we are, right? Like that's literally how the whole thing starts. Jenny, that was super fun. I'm like looking at the clock. I'm like, can I go over? But I'm not gonna do that to everyone. So I'm just gonna be like one final question, which is, what can this community do to help you?
Well, since you ask.
Yeah.
um,
Okay, we're sharing the link.
So here's my book. Actually, the thing you can really do is like write a review on Amazon. It's like the funniest thing. It's actually easy to get people to buy books. Like I've already sold like a few thousand books. It's very hard to get people to write a review, even if you just write like, a great journey through entrepreneurship. Like it doesn't have to be profound, and you don't actually have to put your name or puts like your first name or something. But yeah, like love to get your feedback on the book. And hopefully some of the stories resonate with you. There's a lot of just very, inspirational founders who are, built companies around the world, have had a lot of success, and hopefully, they inspire some of you guys as well. So
Love it. The link is now in the chat. Everybody go buy the book, leave a review. Like this stuff, guys, it takes 5 minutes. Okay. Like literally it takes 5 minutes. You have 5 minutes. So if you enjoyed this conversation, let's support Jenny. And also I need 10 minutes of your time. Please fill out seriously, the survey is going to be the death of me. Like I want 200 respondents because I want to anonymize every story as much as possible. So here's the survey.
I posted it in our Slack channel, I
Thank
think
you.
just today, because I just got that email from you.
Yeah, we were just sending it like in one-on-one messages and like small group emails, and got to around 120 respondents that way. We want 80 more from women specifically. So please fill it out. Give it to one friend, make sure that they fill it out. You don't even have to put your name there. But there is power in data. And so let's get some power together. Jenny, it's been wonderful. Thank you so much, everybody. I don't think that we've announced our next conversation, but it's in the works. I will say that if you're in Seattle, we have Seattle Founder Day on March 26th. If you're in New York City, we have not announced this, but we have just confirmed our space. And so we will have New York City Founder Day on March 12th. Jenny, hopefully we'll see you there.
Wait, not March 12th,
May,
April
May,
12th,
12th.
May 12th.
May,
May 12th, sorry, not March
Yes.
12th.
Yes, I
Listen,
would love to come.
like I haven't slept all week. I'm on my second coffee today. May 12th. It's going to be so fun. I cannot, like, we have not done New York Founder Day in like a long time. We usually do more kind of social stuff when I'm there. And I'm just really, really excited to like spend a full day with founders. So
That's
come
awesome.
see me, come hang out.
I love it.
And again, thank you so much. And everybody, I hope that you have an amazing day. Thanks for spending
Thanks,
an hour.
everyone. Thanks.